Hello, everyone, and welcome to session 19 of Financial Statement Analysis series. My name is Shailesh, and today we are going to talk about computing product level profit margins. Now, in our previous readings, session 17 and session 18, we learned how to calculate COGS at a manufacturing and a trading level and how to compute manufacturing and trading profit margins, right? Now, for people who haven't taken a look at those recordings, I recommend please आप पहले वो देख लीजिए, and then we will move ahead with this one. In this recording, sometimes it may happen that an analyst may be looking for computing product level profit margins. Now, what we are going to discuss once again, as usual, with a case study at point of VIP industries today, we are going to discuss for a listed Indian company how to go about calculating product level profit margin for VIP industries. Now, please understand what we are going to show you in today's session has no relevance or in no way it's a recommendation of that stock. It's purely educational perspective. What we are trying to do here is to teach an analyst how to calculate product level profit margins. Now, this cannot be replicated always. However, in case of VIP industries, we found a brilliant way of analyzing profit margins at a product level, and we thought maybe we'll showcase it through this video. All right. Now, as you may already be aware, and we have discussed this in the past through our revenue blogs, that VIP industries engages into manufacturing of two kinds of products, one hard luggage and second soft luggage. Now, if an analyst were to calculate which particular product is driving profit margins of VIP industries over the years, then maybe taking a look at a mix of manufacturing and trading is something we have already done using Vidhi specialty as case study and point in our previous recording, session 18. However, in today's lecture, we are going to talk about the product level margins. Now, if you want to calculate product level margins of hard luggage and soft luggage, what do you need? You need revenues of hard luggage and soft luggage. You need COGS of hard luggage and soft luggage, correct? Now, I know you must be thinking, product level revenues nikalna koi badi baat nahi hai. Maybe take a look at revenue footnote, or maybe even take a look at MGT9 form, something which we have discussed in the past. So I'm just going to quickly open annual report 2020, which you have in front of the screen. Page number 54 has the MGT9 form. Now, in this MGT9 form, you will notice that there is already a breakup available when it comes to revenue, like 32% of the revenue the firm generates from hard luggages and 68% revenue firm generates from soft luggage. But now, if you want to calculate like how much percentage, or rather what amount of COGS is hard luggage or soft luggage, even if we take a look at page number 137, which is footnote of the financial statements, you won't be able to find any such sort of breakup in the changes in stock in trade, or as a matter of fact, the work in progress finished goods, fair, even cost of raw materials consumed. So how is it that you are going to find out COGS corresponding to hard luggage and soft luggage? Because without that, we won't be able to compute the profit margins, right? So we recommend in such a case, maybe perhaps it makes sense to take a look at the structure of the company, because at times it happens that a company may engage into multiple activities and a particular subsidiary or maybe a particular geographical region is used to manufacture one sort of a product and the other one is used to manufacture something else. Such colors can always be found when it comes to con calls or investor presentations or even annual reports or management interviews. So what we have here in front of you is the Q2 con call FY20 of VIP Industries. On page number 8, you will see that an analyst had asked a question around manufacturing and trading for hard luggage and soft luggage, where the promoter of the company were kind enough to clarify it for us that we manufacture all of our hard luggage in India and we manufacture soft luggage in Bangladesh. We also buy soft luggage from Indian vendors and from Chinese vendors. So this information is gold mine for us. Why? We are going to use this information to calculate hard luggage COGS and soft luggage COGS. Let's take a look how. So I'm sure you must have figured it out by now that when they say that we manufacture all of our hard luggage in India, so when they say India, they are referring to VIP Industries standalone financial statements, right? So when you are referring to VIP standalone financial statements, if I were to use a whiteboard, so we know that the company was amply clear in their con call to mention that hard luggage is manufactured only in India and soft luggage only in Bangladesh, right? And for everyone's benefit, VIP has total 5 subsidiaries. 4 subsidiaries are based out of Bangladesh, and 1 subsidiary, Blowplast Limited, is based off of India. This is something which you can once again get this information in MGT9 form. Let me show you as well. So when you scroll down, you will see that the list of subsidiaries would be present here. So Blowplast Limited is a subsidiary based out of India, and the remaining 4 are based out of Bangladesh. All are 100% owned. And if you want to calculate like which subsidiary is generating how much revenue, you can always refer to something which is known as AOC form. Now, this AOC form is present on page number 221 for VIP Industries. I did the homework for you guys. So when you search for AOC1, you will be able to find a detailed breakup of financials for each and every subsidiaries which the company has. So as you can see here, the name of 5 subsidiaries are present, and this is the India based subsidiary, but it generates 0 revenue. Look at the turnover, it generates 0 revenue, has no revenue generation whatsoever. So you may be thinking maybe they are generating, they are manufacturing something or शायद parent को बेच रहा होगा. Irrespective, these are standalone figures. So standalone में तो revenue आना चाहिए था ना फिर, अगर वो parent को बेच रहे होंगे. Something like in-house setup, that I manufacture something, I sell it to the parent, and then parent eventually sells it outside. So no, even that is not happening. So Blowplast Limited doesn't seem to be doing anything. So yeah, and the remaining 4 subsidiaries based out of Bangladesh, they seem to be generating revenue, right? We'll come back to this, just trying to paint the picture of what the organization structure is for VIP Industries Limited. Now, when the promoter made it amply clear that they manufacture hard luggage in India, so if we take a look at standalone and consolidated revenue figures and likewise financials, when we take a look at standalone, the revenue which corresponds to standalone could be for both hard luggage and soft luggage, because Bangladesh की subsidiaries हो सकता है parent को दे रही हो और फिर parent बाहर बेच रहा हो. That's not really something which we are worried about at the moment, because anyways, we have clarity on the revenue front, right? How much is hard luggage and soft luggage. What we are worried about is COGS. For standalone, when we take a look at manufactured COGS, now this is where the trick lies. When we take a look at manufactured COGS, and once again, I have mentioned this, if you haven't taken a look at our recording of session 17, please do take a look at that on how to computing manufactured COGS. You should be able to get a pretty good idea on how to about computing manufactured COGS. For everyone's benefit, I'm just going to do a quick recap when we actually apply numbers. So just stay with me meanwhile. So manufactured COGS, अगर हम लोग देखें, तो manufactured COGS in case of standalone will correspond to hard luggage COGS. Why? Because standalone means India, and India manufactures sirf hard luggage karta hai, which means manufacturing COGS is going to be hard luggage COGS. What happens to traded COGS now? What would this include? These traded COGS for standalone will include soft luggage COGS as well as soft luggage imported from China, because that is something present in the con call as well, right? So soft luggage COGS will be part of the traded COGS. Got it? So hopefully, you guys have got this part. So when it comes to standalone, the manufactured will be entirely hard luggage, and the traded will be entirely soft luggage COGS, right? So now you must be thinking, why did I not bother to check consolidated? See, for consolidated, it is slightly complicated game. Why? Because when we talk about consolidated, we are talking about both Bangladesh as well as Indian entities, right? So manufactured would include both hard luggage and soft luggage COGS, right? And the traded would include that part of soft luggage COGS, which is basically imported from China and other vendors, right? So hopefully that should, make it pretty clear. So which is why, from a simple analysis standpoint, if we want to calculate hard luggage COGS, we will only take a look at standalone hard luggage COGS. And if you want to take a look at soft luggage COGS, we'll take a look at traded COGS. Now, one thing which I want to clarify here, यहाँ पे हो क्या रहा है? VIP Industries is getting the soft luggages, VIP Industries India, right? So VIP Industries India is getting soft luggage from all the 4 Bangladesh subsidiaries and eventually selling it outside, right? So if that is happening on a cost to cost basis, these subsidiaries wouldn't have any profits left. But if they have profits left, इसका मतलब क्या हुआ? VIP Industries India का जो हमने traded COGS लिया होगा, that is overstated. That's not effectively cost to the company, because now imagine, your subsidiary manufacturing something at 2 rupees, selling it to 4 rupees, and you selling it outside for 5 rupees. When we take a look at your standalone traded COGS, you are looking at 4, but effectively as a family, as a business, आपके लिए ये product सिर्फ 2 रुपए का पड़ा था, right? Not even 4 rupees, because this 4 rupees is essentially your purchase price from the subsidiaries, which had not sold you on a cost to cost basis, but on a inflated price basis, maybe holding some bit of profits at a subsidiary level without transferring that profit to standalone parent level. So which is why if we were to analyze soft luggage COGS and soft luggage margin as an entity, we need to back out this profits from the parent standalone soft luggage COGS. क्यों? क्योंकि टेक्निकली ये 2 रुपए तो पूरे कंपनी के जेब में ही है ना अभी भी. So even if you bought at 4 rupees from your subsidiary, you essentially paid 2 rupees extra. So you need to back out the profits which subsidiaries are generating by selling those materials to VIP Industries standalone. Now that raises a question, how much percentage of subsidiaries outputs are being sold to VIP Industries standalone? Because if they are not selling everything to VIP Industries standalone and selling some part of outside, they are bound to keep that much profit for that particular trade. So you only need to back out the profits corresponding to the selling activities done to standalone, क्योंकि वो आपके घर का पैसा हो गया, technically speaking. अगर आपको नहीं समझ में आ रहा है तो let me give an example here. Imagine VIP Bangladesh is manufacturing 100 rupees worth goods, soft luggage, right? इसमें से 90 they are selling to VIP India at 120 rupees. And the remaining 10 they are selling outside at 40 rupees. So VIP Bangladesh profit, assuming ignoring everything else, the profit which you will see here is 30 from VIP India trade and 30 from outside trade. So overall profit for VIP Bangladesh, you will see 60. So if you want to calculate soft luggage COGS from an overall company's perspective, technically speaking, taking 120, because this will feature in the traded COGS for VIP India standalone. So this 120 will feature in traded COGS, but technically ये 120 में पड़ा क्या आपको, इसका corresponding 30 रुपया profit तो आपके subsidiary के अंदर ही बैठा हुआ है, which you happen to own. So it's like मैंने अपने आप को 30 रुपए ज्यादा करके माल अगर बेच दिया है, तो that doesn't increase cost of goods sold, right? So 120 minus the profit corresponding to the trade done with VIP Industries India should be backed out to calculate actual COGS of the goods. Got it? So which is why 120 minus the profit corresponding. Now this is where the key lies. Like we need to find out how much portion of VIP Bangladesh profits are coming from, or rather how much portion of VIP Bangladesh output is being sold to VIP India. And this is something which is available on VIP Bangladesh subsidiary accounts. Now every company is mandated to disclose subsidiary accounts as per the new accounting standards. So this is VIP Industries website. So when you see here, you will see Blowplast Limited. These are the list of subsidiary accounts. Now Blowplast Limited, we know for sure that it is not generating any revenue. We discussed this from the AOC form. So what we are going to do is we are going to take a look at all the 4 Bangladesh subsidiaries and try to find out whom do they sell that particular product and how much, right? So I just opened it and I'm going to the last page because that's where this information usually is available. As you can see here, VIP Bangladesh is a subsidiary of VIP Industries Limited, which happens to be VIP India. Major products of VIP Bangladesh Private Limited are exported to VIP Industries. So, which means, given the information, we will assume everything which is being sold by VIP Bangladesh Private Limited is being sold to VIP Industries Limited. Now, I'm sure you guys remember this, but we have actually discussed this in our previous videos as well, where we discussed standalone and consolidated, and we talked about VIP Bangladesh selling everything to VIP in India. So this is just a quick recap of the same. Now, if you do this for all the remaining 4 subsidiaries, you will find out that the entire sales made by Bangladesh subsidiaries are to the parent subsidiary, or sorry, the standalone parent. So which means the entire profit which VIP Industries Bangladesh subsidiaries are making, how much is that? Let's take a look. This is it. Profit after taxation, 6.43 plus 23 plus 3.43 plus 1. That's roughly about what? 34 odd crores, 34 odd crores or 35 odd crores. So the profit of 35 odd crores, which VIP Bangladesh subsidiaries have made, that's technically from selling soft luggage to VIP Industries India. Now, technically, so traded COGS, which we will be taking for soft luggage COGS, has to be deducted with these 35 crores. क्योंकि ये पैसा तो कंपनी के जेब में ही रह गया ना, तो कंपनी को effectively खर्चा कितना लगा soft luggage manufacture करने? The traded COGS part minus this 34 crores. Correct? So let's actually get on with the numbers now. Let's try and calculate the figures. So let's take a look at the VIP Industries annual report. Now, page 137, I'm going to open. You can see traded goods revenue 1164. You can directly take this. Now, remember, I'm referring to the standalone financials. I'm not referring to the consolidated financials for the confusion we discussed earlier, because the manufacturing COGS is going to include both hard luggage and soft luggage COGS there. But in case of standalone, it is only going to include manufacturing is hard luggage and trading is entirely soft luggage. So which is why we are coming here. You can either take soft luggage revenues from here, or you can take the percentages, the 68% which we saw from the MJT9 form, multiplied to the overall revenue. You should get more or less the same revenue figure. I'm just going to move to the blog where these calculations we have already done for you guys. So as you can see, 1168, very much approximately equal to what we see here to be 1164 soft luggage revenue. That's okay. Now coming to the COGS part. Now remember, we are trying to calculate soft luggage COGS here. So when it comes to standalone, soft luggage वो किससे ले रहा है? अपनी subsidiaries से, and ready-made खरीद रहा है. So which means उसके तो traded COGS में आएगा. How do you calculate traded COGS? Do you take cost of raw materials consumed? No. We take a look at changes in stock in trade and purchases, right? So purchases we already know to be 604, and changes in stock in trade can be taken 276 as opening and 389 as closing. So if we subtract opening minus closing and we add 604 to it, you should get the traded COGS. So 604 plus 276.97 minus 389.86. That is going to be what? Our traded COGS. As you can see, precisely what we have done here, guys. 604, that's how we got this. And 276, right? And sorry, 386 is the opening one. I think I took the closing one to be the opening one, but you get the point. So 389 is basically the beginning of the year. So opening stock in trade and closing stock in trade is 276. So how do you calculate traded COGS? It will be 604 plus 389 minus 276, opening minus closing. And let's not forget, ये soft luggage subsidiaries ने standalone VIP Industries India को बेच के 34 crores rupees कमाए थे, right? And we got that from AOC form 1. I just showed you earlier. So we will have to subtract this from the COGS, correct? So the actual calculation will go something like this: 604 plus 389. I'm ignoring the decimals here, guys, so bear with me. Minus 276 and minus 34. That should give you a COGS of 683 crores and a revenue of 1168, which we got from either MGT9 or the footnote of revenues. Remember, these are standalone figures. If you take a look at consolidated figures as well, from a revenue perspective, both are same, so it won't really make a difference there. So 42% is the margin which you get. How do you get that? 1168 minus the COGS divided by the overall revenue. 42% is the profit margin when it comes to soft luggage. Now let's talk about hard luggage. It's the easy part, because once we have figured out how much is soft luggage, which is basically traded COGS of standalone, we need to take a look at manufacturing COGS of standalone. How do you get manufacturing COGS of standalone? You take a look at cost of raw materials consumed and changes in stock in trade and finished goods, right? So what you have here is this. So cost of raw materials consumed, you already know. This is something which you're going to get, directly from here, 219.06. You can directly take that, and changes in finished goods and work in progress. You can take these two items, precisely what we have done on our blog here. Let me just show you a quick working. So 219.06, which we saw, we got here, cost of raw material consumed, and change in finished goods and stock in trade, right? So finished goods and work in progress. So finished goods, this is closing 52, you got here, right? 9, you got here, which is closing. Once again, opening is 9.43, you got here. Once again, it's opening minus closing, guys. Do not make that mistake. And 42.08. So if you want to calculate manufacturing COGS, which happens to be hard luggage COGS, how is it that you're going to proceed here? 219, which is cost of raw materials consumed, plus opening minus closing. So how much is opening finished goods? 42, minus closing finished goods, which is 52, plus opening work in progress, which is 9.43, minus closing work in progress. That should give you 209. Why did we not subtract any subsidiaries profits here? अरे यार, ये तो VIP Industries India में ही मैन्युफैक्चर हो रहा है ना सब कुछ, तो देयर इज नो सब्सिडरी प्रॉफिट्स परस्पेक्ट. तो जो भी खर्चा लग रहा है वो COGS में लगा हुआ है directly, so you need not back out anything from here. That's the beauty. Now when you take a look at this, you will see that hard luggage has a profit of 62%, profit margin of 62%. This is how you calculate profit margins for hard luggage and soft luggage across FY20. Now we took the pleasure of doing this analysis across 7 years. The data tells you something. So across 7 years, when you take a look at the breakup of hard luggage and soft luggage, you can see that the breakup of soft luggage has more or less remained constant. It increased in between. A trend आया था वरुण धवन का soft luggage, the light bags and everything. And then eventually came hard luggage trend once again, with the trolleys. And so we are back in business when it comes to hard luggage. So, more or less, you can see the revenue contribution has remained same from 2013 to 2020. But when we take a look at the profit margins, the overall profit margins of the business have increased from 44% to 48%. Remember, this number is overall profit margin. Now, how do you get overall profit margin? Overall revenue minus overall COGS. Please do not make a mistake while we were calculating hard luggage profit margin. We took hard luggage revenue, okay, guys? So, and hard luggage revenue was something which is available in the footnote, or you could have multiplied the percentage. So 547 more or less, 549. I basically multiplied the 32% to overall revenue, which is why we got that 549. So when you take a look at this, what does that tell you? Let's try and find some interesting trends out of this analysis. So the profit margin seems to be increasing. Is it because the composition has changed? No, the composition seems to be more or less same, but take a look at this. The hard luggage profit margins have increased drastically. Soft luggage has remained same. So a product which is of a constant mix, but had its profit margin increase over a period of time, started impacting the overall profit margin in a positive manner because the profit margins started increasing. So the secret behind increasing profit margins of VIP Industries is their hard luggage segment. Their hard luggage profit margin improvement over a period of time has been the secret behind the overall profit margin increase of VIP Industries across 2013 to 2020. Hopefully you guys understood the content of this video and you liked it. Please do subscribe to our YouTube channel. Also make sure, in case if you have any further questions, feel free to ask those questions in the comment section of our YouTube video. You can also ask these questions here in the comment section of our blog. which is present on our website, finacleshahclasses.com, under forum section. You can also find more informative content on our YouTube channel through sectoral research analysis or business analysis series, even stalwart series, which we recently started, where we have started inviting some reputed fund managers out there to share some insights around really brilliant concepts out there. All right. Thank you so much, guys. I'm Shailesh. I look forward to seeing you guys in the next session. Hopefully you guys like it.